traders, welcome to the TMT stock market strategy video for Friday, August 12th. All right, well, the markets did pop a little bit yesterday, making new intraday highs, and just to get sold into, and then markets popped again, and at the end of the day, they sold them again to run the buy stops and the run the sell stops. So low volatility environment, very boring trade with no support, basically with no price support. So when price rallies up, markets just really just collapses basically, intraday when I'm talking about. And then we start to move higher again to only get sold into at the end of the close. So if you were long, you were right direction, but probably got stopped out. What do we have here? Well, I'm going to look at a few things. There's really not much to even talk about as far as what the markets are doing other than a slow grind higher. I do think that we're very, very near to some sort of a local top where the markets will pull back. They will, guys. It's only a matter of when, and that's the whole secret. Nobody knows when. Right in front of you, you have the VIX here. You can see these bands haven't been this tight in years. So be prepared for market volatility. We are in the seasonal time of year where the markets actually start to pick up in volatility. And I can't wait. I'll be honest with you. It is very, very boring out there. You could see positive divergence as markets not doing anything. So the VIX here is telling us get ready for explosive move. Next, we're going to show you is the SPX with the average true range. This is dangerously low, meaning overly bullish. The markets are extremely bullish with absolutely no fear. You could see when that happened here, market sold off. Here, market sold off, and here as well. So just be prepared for market turbulence coming in the next few months. What do we have now as far as our main oscillators? We are still TMT's price model, trading model is still neutral, starting to get slightly bearish, but we are not in a full-fledged sell signal yet. I just want to show you the NAMO, which is the Nasdaq McClellan oscillator, basically at a neutral state. This next is going to be the McClellan oscillator. Excuse me, let me get that out of the way. Is the McClellan oscillator, and it is as well in a neutral reading. So we are neutral in a lot of the oscillators, but turning lower. Let's take a look at gold. You could see gold. We are trying to get to that 1380 handle here. A lot of overhead supply, but we are making higher highs and higher lows, which is bullish. But if you look at the MACD, RSI, and stochastics, they're all rolling over. So you have to be careful here. Use caution. Me personally, I don't think there's a lot of upside left in the gold in the short term. And I mean, because of this move, we need to digest a lot of this move here. So I'm looking for a breakdown lower to the around 1300 area, and ultimately this 38% that comes in around 1260, 1270. And again, I just add a few points here or there. I don't make it exact, but this is where I'm looking for 1260, 1280 if it breaks 1300. So if not, we're looking for a 1300 print, and then we should resume higher. Gold is in a longer term bull market now. It has started its second leg, but you don't want to buy gold here and have to ride it all out down here until it starts to go up again. So stay away from gold at the moment, unless obviously something really crazy does happen. Here's the GLD, and you could see that in the ETF, the gold ETF. You could see same thing. I'd like to see 125, if not 124, would be more of an ideal area where it start nibbling in the gold markets. Okay, here is the GDX, and the same thing I mentioned. You've seen this all week. I've been posting. You could see here that we're kind of waning. Even though GDX rallied higher, it got pushed back down again. So telling you that price action is exhausted and looking for a rest, even if it went sideways like it did here back in March and April. This would be constructive foot to the upside. But me personally, looking for a lower move back down to the 38%, somewhere around 27-ish to 25. So 25 is a 61.8% retracement off this move from this low to this high. So let's see what happens here, guys. But it does look like it's looking for a rest. Here's the TLT. And what I want to show you, aside from the TLT, before I do that, let me just show you what the interest rates are, the yield. You could see that we're at 157, and showed this to you as well when we were down here, and I said we have an inverted head and shoulders with a very sharp slanted neckline. We're back testing that neckline now, and look what happened yesterday. We started to pop 160. We really need to take this swing high out. If this swing high gets taken out 160, you're going to have a decent move to the downside in TLT. Now, yesterday I put this arrow saying we're making lower lows and lower highs off of this M formation or bearish. Uh, uh, Sorry about that. A descending triangle, which is overly bearish. So we have two bearish patterns here. They both need to break the neckline here at 137.50, and then I think you see 134 quite quickly, and that's a 38% retracement here. And this is where somewhere where the markets would generally pause and see if we're going to pull back a little bit. But I think that rates have bottomed, and I think you're not going to see those low rates anymore. I think they're going to start rising rather quickly. Here's the spiders. Go right into the indices. You can see we made intraday highs. We made new highs, excuse me, all-time highs. But you could see all-time highs with our momentum indicators starting to roll over as the MACD and RSI, and very, very low volume. So I treat this as suspect. We need to take out the 214.45. You could see that here on the 60-minute. This is the area 214.45, 214.50 to alleviate any downside pressure. I'd like to see first, obviously, let's take a look at the 217. We lose 217, then the 214.45 needs to get taken out. Then I think we start going lower. But as of right now, you could see, guys, very dismal summer trading right now. We had one down day, and then we had another little push lower, and then that was pretty much it. So very boring trading. So sit on your hands. You have nothing to do. There's no reason to overly trade, guys. We have another 2 to 3 weeks of August. But believe me, August is going to surprise you. You're going to have a couple of big moves, and that's when you want to really wait. And you get paid. You get paid for the month. You don't have to trade every single day if the markets aren't there, giving it to us. Transports here did well yesterday, but still you could see MACD RSI rolling over. Just want to show you that the transports really, our leader needs to start leading, and it's not. Here's the IWM 121.60 is going to be that key. You can see Bollinger Bands are pinching, so we're looking for a big move, and you can see here, guys, we're starting to roll over again. So I just think personally that the markets are extremely exhausted, and needs in dire needs for a rest and some sort of a pullback, which is healthy. But whoever the powers that be are not just letting this market go down. So we'll see what happens. Here's the Qs 116.30. All right, but I would suspect watch the TLT, watch gold, and watch the transports. Those are going to be your big cues, and I think the TLT and the gold is going to produce a nice, decent trade to the downside. All right, guys, hope it helps. Have a great day. We'll see you on Monday.